Good afternoon and a warm welcome to the annual open forum for the Access Pension Plan, the 2023 edition. We're very glad to have you. My name is Isaac Oparinoy and I'll be moderating this session. Before we begin, we'd like to take an opening prayer, and to do that, we'll invite Jeff from Access Pension Trust to lead us to pray shortly. Please let's give it up.
Let's pray. Indeed, Lord, we thank you for another time like this in your presence. We commit our meeting here into your care. We pray that it will be a success as we discuss our future. Amen.
Amen. Let's give it up for Jeff. Thank you for that prayer. Thank you. Once again, we'd like to welcome you to the annual open forum for the Access Pension Plan, the 2023 edition. It's an opportunity that we don't belittle at all. We get the opportunity to report to you on what is happening on the fund and also take feedback from you. Quickly, I'd like to introduce some personalities have in our midst. The board of trustees of the Access Pension Plan are all here represented and to report to you. I would like to quickly mention their names, and as I finish, when I finish mentioning them, then we can give them a round of applause. So we have the chairperson for the board, that's Mr. Robert Marshall Benin. Mr. Fiyowari is a member, he's here. Dr. Sokante is a member, she's here. Daniel Kwesi Sapon is a member, he's here as well. Matthew Mani is a member, he's here. Mr. Samuel Atubwatin is the independent trustee, and we also have Mr. Samuel Ainin, also an independent trustee. They are all here. We can give it up for our board of trustees. We also have with us Mr. Gilbert Lomofio from John K. and Associate. They are the independent auditors for the scheme. We also have Madame Louise Siam. She's the secretary to the board of trustees. The general manager of Access Pension Trust is also here. And then we have representatives from the custodian of the scheme, that is Zenith Bank. They are also here. And finally, we have one of our partners, First National Bank, as here as well with us. We can give a round of applause for them as well. Thank you. We'd like to have an opening address before we kickstart the program. And to do that is the Chief Executive Officer of Access Pension Trust in the person of Mr. Efie Owari. We'll receive him and he will give us an opening address, then we can continue. Please let's give it up to Efie as he joins.
Thank you very much, Opare. And good afternoon, ladies and gentlemen. You are warmly welcome to this afternoon's open forum for the Access Pension Plan. As you are aware, this particular forum was constituted years ago to give you an opportunity to engage with your trustees and to also give us the opportunity to render an account of our stewardship of the management of your retirement savings. What started years ago, in 2012 to be specific, as a nascent industry today has become the main building block of your retirement pot. The private pensions industry today manages over 40 billion Ghana cedis of assets. And this is approximately 3 times the net assets of the Social Security Scheme, SNET. And this means your account in the Access Pension Plan is increasingly becoming an important source of your future retirement income. To achieve a dignified retirement income, it is imperative that the purchasing power of your savings is preserved. Unfortunately for us in Ghana, the events of our recent past has been rather unnerving. The assets of SNET has hovered around 2.3 billion in the past decade. And between last year and this year, the assets of SNET has fallen from $2 billion to just about $1.1 billion at the end of 2022. Similarly, the combined assets of your Tier 2 and Tier 3 schemes across the private pensions industry has declined from $4.6 billion in 2021 to just about $2.9 billion in 2022. In the last 18 months, approximately 70% of the purchasing power of your savings has been eroded by inflation. And this, unfortunately, is the risk we live with. So in anticipation of the recent economic meltdown, we took some proactive steps at Access to avoid the worst outcomes for your fund. We shifted about 50%, and I mean a whopping 50% of your assets into Government of Ghana Euro bonds to protect your savings from value erosion. And this was anchored on the belief that foreign investors will suffer the least should there be a debt restructuring. After all, Ghana will continue to need foreign investors to finance our future budget deficits. And if you are familiar with our fiscal situation, we've always had protracted budget deficits in Ghana. And so we thought it was prudent to align our interest and your interest with the interest of foreign investors. Cash is a risky asset to hold in a hyperinflationary period. So we maintained very minimal cash position for the Access Pension Plan, except for what we anticipated would be needed to pay benefits that were due. We maintained our average equity position at 6.5% in 2022, and I must say there is room for improvement. And this is a marked improvement over what you will see in an average pension scheme, which has just about 1% holdings in equity. Our view is that equities will rebound when the economy recovers, and thus equities are considered a good hedge against long-term inflation. Again, Faced with limited investment options, we increase our holdings in the ABSA Gold ETF to 7% for tactical reasons. And I must say that in the work we do, we face significant constraints in our investment processes. The MPRA's investment guidelines places emphasis on listed securities. However, in many transitional economies such as Ghana, private markets are much bigger than public markets. For instance, credit to the private sector from the banking sector is approximately 73 billion was approximately 73 billion Ghana cedis as of June this year. And this is against 616 million Ghana cedis of the value of corporate bonds outstanding as of June. And so if we insist on just listed corporate bonds, we will have only 616 million Ghana cedis to invest our 40 billion cedis in. And you cannot imagine it is just not feasible. The equity market is not very different. When juxtaposed against the free float shares, the Ghana Stock Exchange, in our view, cannot absorb 5 billion Ghana cedis investments from pension funds. So practically, investment options aside government securities are very limited, and we cannot achieve effective diversification against the backdrop I have given. To get some discussion underway, we applied to our regulator, the National Pensions Regulatory Authority, to increase allocation for foreign investment or external investments to 20%. Though our request was declined, we believe continuous advocacy by the Chamber of Corporate Trustees can help achieve some good outcomes in the medium term. And so we are not resting on our odds. We are positioning ourselves well in advance of that approval to enable us to take advantage when the regulations allow. The debt exchange program, or the announcement of the debt exchange program, unsettled a lot of people, including most of us. Thanks to the instrumentality of organized labor and the advocacy of the Chamber of Corporate Trustees, pension funds were exempted from the debt exchange program. The initial one, I must clarify. However, to enhance tradability and ensure that pension funds are prioritized for coupon payments, the Ministry of Finance has initiated an enhanced debt exchange program for pension funds. And your trustees have decided to accept and exchange our old bonds for new bonds under the enhanced terms. And this is so because the new deal offered by the Ministry of Finance offers a better return and cash flow certainty. The worst of the economic crisis may be soon over, but let's be clear, there remains the need to save more and recover what has been lost to inflation over the past 18 months. Persons approaching retirement have very little time to rebuild their retirement savings. Hence, their personal pension accounts may become an important source of additional retirement income. For those of us retiring after 5 years, the power of compound interest can still work its magic in our favor. But the need to save more to offset the effect of inflation should not be lost on us. And this, we believe, can be done by increasing your personal pension contributions. And so I wish to admonish all of you to repurpose your personal pension savings as a source of supplementary retirement savings. And we also encourage those of you with provident funds to have the same mindset, which is to put in place deliberate measures to save up any additional windfall you may also have. Bonuses, salary increases, because don't forget, you have 70% value already lost to inflation, and that must be recovered. Without these, you may fall into poverty when you retire because of the loss of purchasing power. So this afternoon, your trustees are here to engage with you, to answer your questions and address any concerns you may have. Please, let's make this very engaging for the mutual benefit of all of us. Thank you very much.
Thank you very much, Mr. Efri Owari, for that insightful opening remarks. Next on the bill, we're going to have a report from the Board of Trustees, and it's going to be given by the board chair of the board, or the chairperson of the board. In addition to that, Nanari Afiboama will also present to us a performance, a strategy, and the outlook going forward. And then we'll have two other presentations from First National Bank and then the General Manager of Access Pension Trust. So at this point, I would like to invite Mr. Robert Mbenin, the board chair of the Access Pension Plan, to give.
Thank you very much. Good afternoon. I want to express my profound gratitude on behalf of the Board of Trustees of the Access Pension Plan for the opportunity given Access Pension Trust to manage your hard-earned money. We understand that for most of our clients, their Access Pension Plan constitutes their largest savings to date. We therefore do not take the opportunity granted us to manage these resources lightly. We promise to remain a faithful fiduciary in guiding and helping our members achieve their retirement goals. We also want to welcome you to the 4th Annual Open Forum for the Access Pension Plan. My remarks are structured to touch on the global economy as well as the Ghanaian economy, the scheme's asset positioning and return for 2022, which will dovetail into a brief education on investment risk, and end with a general scheme operational update. The global economy in 2022 experienced significant challenges from the war in Ukraine and growing geopolitical tensions between China and America. The resultant effect of the global uncertainty was felt by almost all nations, resulting in increased energy and food prices, mounting inflation rates, rising interest rates, and volatile markets. The Ghanaian economy was not spared and was heavily impacted by the Ukraine war that disrupted global food and resource supply chains. These, coupled with our local economic management weaknesses, plunged the Ghanaian economy into an unprecedented debt and fiscal crisis. Ghana's economic indicators spiraled out of control during the year under review. Inflation, which began the year at 13.9%, closed the year at 54.1%. Interest rates on the 91-day and 2-year Treasury maturities increased from 12.52% and 16.74% to 35.36% and 36.10% respectively. The cedi saw the steepest depreciation since 2014, closing the year down by about 30% from the beginning year value. To stem the tide of the fast failing economy, the government announced it was going to seek monetary support from the IMF. It is believed that an earlier announcement to seek IMF help would have averted most of the pains the economy experienced in 2022 and still going through today. To bring the nation's debt to sustainable levels and also qualify for IMF financing, the finance minister announced the domestic debt exchange program to help reduce the country's debt to GDP from the current 102% to about 55% by 2028. Government bondholders have had to take significant interest rate discounts as well as extension in their bond maturities as a result. In spite of the unsettling landscape, 2022 was another strong year for the Axis pension plan. Over the course of the year, we shifted our asset allocation away from local currency, government of Ghana securities, and significantly increased currency diversification within the portfolio by growing our Ghana Eurobond allocation and exposure to the ABSA New Gold ETF. The effect of the depreciating currency and gold's strong performance in 2022 resulted in an average return of 36.5% for the scheme's constituent funds. This return represents 5.5% return above our average inflation benchmark of 31% and 6.9% above inflation over the last 3 years. Total asset under management represented by the scheme's net asset value for year-end December 2022 was 251 million Ghana cedis, up from 183 million Ghana cedis at year-end 2021. Each year, we use the public forum to extol the virtues of long-term investing as it relates to investing for retirement. This year, we want to use the opportunity to highlight the often neglected subject of risk as it relates to investing. Risk refers to the degree of uncertainty and or the potential loss inherent in an investment. Every investment decision is subject to risk. The risk comes in multiple forms. I will highlight 4 common risks that directly affect the Axis pension plan. The assets under our management are subject to credit risk, where a potential issuer, government or corporates who issue securities may fail to honor their debt servicing obligations. Our investments in fixed interest rate securities also present another risk called interest rate risk. Interest rate risk occurs when changes in the direction of rates affect the market value of securities held by the scheme. Since interest rates are constantly changing, values of investment assets such as bonds, treasury bills, and real estate also change in relation to the changes in interest rates. Mark-to-market, which became a talk of town in 2022, relates to the value of fixed income securities falling when interest rates rise and vice versa. The asset management industry, through their regulator, took a bold step to force their members to reflect changes in interest rates which is known as marking to market, on their portfolios daily. It is the international standard for valuing securities, and it is expected that the pensions industry will follow suit in the near future. There is also currency risk, which relates to the value of an investment in a base currency changing due to investment in assets in other currencies. Currently, the fund's assets have some substantial exposure to US dollars, and therefore movement in the currency will have an impact on the daily value of the fund. To bring it home, anytime Ghana cedi depreciates relative to the US dollar, client balance will reduce to reflect the change in the currency. Lastly, the scheme's exposure to stocks on the Ghana Stock Exchange exposes scheme members to equity risk. The risk of investing in equity includes share price falls, receiving no dividends, or receiving dividend lower in value than expected. The above risks expose our clients to daily movement in their account balances. In the short term, there will be periods where client balances will reduce when the above mentioned risks move against the schemes. There would also be many periods where clients' balances will go up. Overall, in the long term, we do expect that the up periods will outnumber the down periods and ultimately deliver growth to you, our cherished clients. To summarize, every investor in today's market shall be subject to market risk. Investment is not a free ride. It is only a Ponzi scheme that promise and guarantee a return equivalent to the 45-degree angle line on a continuous basis. All that you see is going up all the time. Legitimate and genuine investment programs are characterized with bouts of up and down movements. And so typically you will see your returns going up and down, but in the long term, overall, you will see an upward trend. It is the disciplined investor with long-term perspective who will live to see the glory days. We believe the only way to build trust is by communicating frankly and regularly with our clients. We continue to engage our clients through multiple channels, including periodic engagements online and physically. Our daily show on Sunny FM, Sunny 88.7 FM in Accra, our pre-retirement seminars, and the annual open forum are means for engaging with you, our scheme members. The essence of these engagements is to give account of the stewardship of your money. We are proud to have sent multiple client memos to update our members on the management of your investment in 2022, especially due to the fluid and fast deteriorating local economic indicators. These memos, we believe, as fiduciaries, help us keep you updated on key decisions, especially during the fluid situation, which may not permit a meeting within the short term. We will continue with this initiative in 2023 and beyond to walk this journey with you and keep you informed of major decisions we take on behalf of your fund. On behalf of the Board of Trustees, I thank all participating employers and scheme members for your continued trust in our stewardship of your financial resources. Have a great 2023 and keep investing. Thank you very much.
Thank you very much, Robert. Thank you. Thank you so much. If you're just joining us, we'd like to remind you that this is the 2023 edition of our annual open forum for the Access Pension Plan. We have received a lot of questions and we are answering them in the chat box. At the appropriate time, we'll answer some of them live here on stage. So please keep the questions coming. We'll address all of them. We would like to also receive Mr. Nanaria Feboama, the Chief Investment Officer at Access Pension Trust, to present to us on the performance, the outlook, and then also the investment strategy going forward into 2023 and beyond. Please, let's give it up for Nana.
Right. Good afternoon to our dear scheme members. So my goal today is to present your Access Pension Plans performance for 2022 and outlook for 2023. But before we go into the main issue for discussion, it's important we throw a bit more light on the macro and the microeconomic environment within which the scheme operates. So for many of us, 2022 was indeed a year to forget. Almost all the macro indicators spiraled out of hand. The government delay in seeking help when it was obvious that the economic ship was sinking finally did the right thing and announced an intention to seek IMF monetary support somewhere July 2022 to stem the tide of the economic hemorrhage. The IMF bailout, of course, came with difficult conditionalities, mostly in a bid to reduce our debt to GDP, which had touched the 100% mark to about 55% in 2028. And to get this done, the government announced a domestic debt exchange during the November budget read. Amidst all of this, 2022 GDP print came in at about 3.1%, driven mainly by a slowdown in general global growth. We had issues with global supply chain disruption coming on the back of surviving COVID-19, which led to global inflation across markets. In Ghana, we saw inflation peaking at around 54% amidst tightening monetary policy by the central bank. These difficulties drove GDP to 3.1, below the growth rate we saw in 2021. The difficulty, of course, led to a softening in consumer and business sentiment. If you look at the composite index of economic activity graph, you'd see the longest trend downwards in the sentiment indicator beginning somewhere March 2021. And this is the longest, downward, stretch, we've seen. In the face of the global supply chain disruption, in our view, policy, mishaps by the BOG in terms of over supporting the fiscal authorities by printing or giving overdraft. And again, the insatiable desire, to spend more than the resources. We saw the main macro indicators, getting out of hand. So inflation peaked at about 54.1. And for, watchers of economic indicators, This is probably, the highest inflation rate we've seen in about 25 years. We also saw monetary policy rates closing the year at around 29.5%, and also saw the currency losing about 30% of its value for the year under review. In fact, at the point in 2022, the cedi had depreciated more than 70%. This should give you an idea of the difficult economic environment within which your scheme operated. On the external side, we saw capital and financial accounts turn negative as the external capital market was shut on us. We had, since President Kufuor, days, resorted, to the Eurobond market to borrow, to shore up our reserves. Last year, that market was close to us. Rather, what we saw was a lot of portfolio outflow from our local bond market, and that led to a wide negative in our capital and financial account balance. The only, positive on the external, side was the huge jump in our trade balance. And this was driven mainly by rise in crude prices because of the Ukraine-Russia war. We also saw gold performing quite well as investors, fled to gold to hide from the emerging, risk in global markets. The combined effect of the negative external environment, of course, led to a sharp dwindling in our reserves. So gross and net reserves touched an all-time low. We closed the year for our import, cover less than the Bank of Ghana's target of 3 months import cover. As we speak now, per the last Bank of Ghana economic, read, our import cover is even below 1 month. It's below 1 month. Again, we saw all this negative economic sentiment feeding through key interest rate curve. So across all the government benchmark curves, we saw a steep hike in interest rate. Eurobond yield curve saw the largest spread since we began tapping that market, which led to huge losses across both the local government bond and the Eurobond. Again, what drove the widening in the spread was because of consistent rating downgrade by the 3 major rating agencies. Now, in managing your money, we took into account the difficult macroeconomic background to position your assets for growth. We couldn't throw our hands in the air and say that because of the difficulties, we really can't do much. So we took we made a number of key tactical changes in ensuring that at least your scheme's return mirrors inflation. The scheme's investment objective is to provide stable return above the inflation rate over the long term. So everything we do is to ensure that we are able to preserve the real value of your scheme. And in doing that, you'd realize, we almost doubled our equity allocation. 2021, our equity allocation was 19 million. We increased that allocation to about 37 million. Again, we shifted a larger portion of our local bond holding into Eurobonds. Around May and June 2022, we sold over 50% of our local bond holding and deployed it in Eurobonds. You would also see a sharp reduction in our mutual fund concentration, and also our fixed, deposit holding. All the sell down in these two asset classes were deployed in asset classes we felt could generate return to mirror the difficult economic circumstances in 2022. If you look at this chart, you'd realize that out of our total treasury note holding of about 183 million Ghana cedi, close to 112 are in Eurobond. Now, what is the impact of this huge shift in strategy and asset allocation? It makes, our schemes very sensitive to the movement of the GHS vis-a-vis, the USD. So anytime, the CD depreciates and you are invested in this fund, you would see a jump in your return, i.e. your balance, and vice versa. When you see, the CD strengthening against the USD, you would experience some fall in your balance. And the key reason is that we shifted quite a chunk of our GHS holdings into USD holding. Again, we did that on the back of the fact that we wanted to preserve the purchasing power of our scheme members. We did a survey, and the survey revealed that majority of people saving in their personal pension are saving to indulge in purchases that are linked to the dollar. And we live in a country where everything is linked to the dollar. And because of that, we felt if we don't take that action, right, we may create very wealthy CD millionaires whose CD could not even buy or cannot even buy a wheelbarrow. Now on your scheme's return, vis-a-vis our key, benchmark, because of our asset positioning, the Access Pension Plan generated the best, performance on record since inception. So the average return on the Access Pension Plan was 36.5%. And this compared very favorably with the returns of the average mutual fund in the market that pulled less than 5% return, taking into account the mark-to-market that sector was hit by. Now, our key objective, as I mentioned before, is to outperform inflation. So whereas our scheme brought in 36.5% in return, average inflation for 2022 was about 31, which meant we exceeded our benchmark by 5.5%. Again, the return on our scheme outdid the depreciation of the CD. Let's move beyond just a single year return and look at the performance of the scheme since inception. We want you to judge us by our long-term performance. You'd realize over the last 5 years, the scheme return on an average basis is about 19.9% compared to inflation of 13.6%. Since inception, the scheme has generated 20.9% return compared to an inflation rate of 14.5% and an average USD depreciation of 14.1%. Again, on a cumulative basis, you'd realize the scheme has generated in excess of 400%, which means 100 CDs invested in our scheme when we began would be equivalent to 552 CDs today. Can you imagine if you had consistently, saved 100 CDs over this period, how much money you would have in your Access Pension Plan? Now, how does the future hold for the scheme? Yeah, we are still, going to experience, the economic headwinds, we faced in 2022 continues in 2023. The tightening in monetary, policy means we may not see, growth rebound anytime soon. We know, banks are cutting down or cutting back on credit because of the general, interest rates in the market. I mean, consumers are unable to borrow, to spend, or to expand, I mean, their businesses because of general high borrowing costs. This paints a bleak future around growth for the country. As a matter of fact, our GDP growth for 2023 was revised, I mean, downwards from initial 2.5% to about 1.8%. How do we plan to preserve and grow your money within the difficult economic environment? Good, taking into account, I mean, the difficulties, I mean, we are facing, we are quite bullish. We are quite, I mean, bullish that the Ghana Stock Exchange will deliver returns, I mean, to investors. So as a strategy, I mean, going forward, we intend to maintain our exposures and increase our exposures to equities to align with our strategic asset allocation, which is between 15 and 20%. We also see huge advantages in banking stock, given the sell-off we saw last year and this year because of the DDEP. Some of the banks listed on the stock exchange have managed the DDEP well, and they are generating, I mean, good return, and will take, I mean, the advantage of lower price, I mean, to go into some of those, I mean, stock. Again, in equities, I mean, we are looking really at companies with strong balance sheets, companies that have good governance, companies that are generating very healthy cash flow and are consistent dividend, I mean, payers. We feel in the long term, investment in equities provide a hedge against inflation. Around, I mean, fixed income, where majority of your assets are invested, we are quite, I mean, neutral, right? Around government of Ghana, I mean, bond, I mean, holdings, right? So we have stayed, I mean, put for most, I mean, of the years investing in government of Ghana bond. Treasury bill provides opportunity, I mean, for us. Currently the yields, I mean, are good, despite, I mean, the fear and uncertainty. We feel it's better to stay invested and to keep monies in cash, and therefore, given or subject to availability of liquidity, we would invest in some of those assets. I mean, where we see, I mean, opportunities, I mean, for long-term growth really is in the alternative space. The MPRA defined alternative investment to include private equity, private credit, private finance, project finance, infrastructure finance. We've seen some few managers putting together investment opportunities around alternative asset class. Together with our fund managers, we are working to expose, I mean, your assets to some of those opportunities, in as long as those opportunities will generate the cash flow that would ensure that our members are able to have income and good return to ensure a dignified, I mean, retirement. So all in all, we believe that despite the difficulties and the challenges we are facing as a country, there are still, I mean, great opportunities to invest and grow our client retirement saving, right? I believe a scheme like Access Pension Plan still provides great opportunities for investors to invest in and expect, I mean, growth, because your trustees are working very, very hard to ensure that your money ultimately grows. Now we would want to quickly, I mean, touch on the domestic debt exchange program. As a matter of fact, I mean, the offer that has been made, I mean, to pension funds. Your board of trustees have accepted the new DDEP proposal. And the reason is simple. Under the old bond that we currently hold as a scheme, the average return or the average coupon we are making on our holding comes to about 18.24%. Under the new DDEP program, the average income and cash flow from our holdings increases to about 21%. And I guess any day, anytime, 21% is better than 18%. On this basis, we will tender in all our old bonds for the old bonds because immediately it provides better value for our scheme members. So this is just, you would see from the chart, if you look at the extreme right, the expected, cash flow from the old bond currently, comes to about 16.4 million cedis. If we are to exchange our old bond for the new bond, we'll be making about 17.7 million cedis from the exchange. On this basis, we will tender in our bond. And would like to put on record and advocate to our scheme members. Let's not listen to the noise, right? Let's not listen, to the naysayers. Accepting this offer does not put your pension savings in jeopardy. The issuer is the same. The issuer of the old bond is a buying. The issuer of the new bond is a buying, right? So in terms of credit risk, we are at par. But government has given, the assurance that they would honor obligations, going forward on the new bond. And it puts our scheme in a position to receive income and reinvest for growth. Under the old bond, government is not servicing, the obligation. So it makes you better. Don't buy, the hype and come and withdraw because somebody is telling you it's a bad offer. Like I mentioned, under the old bond, our average return is 18%. Under the new bond, average return is 21%. On this basis, I would end my presentation and pass the baton back to Opari. Thank you.
Thank you very much. Let's do it for Nana Hiafe. Thank you very much for that presentation. Would like to remind you that this is the 2023 Annual Open Forum for the Access Pension Plan, brought to you by Access Pension Trust. That's your reliable partner in pensions. We'll be taking a presentation from the independent of the scheme. But before that, I would like to remind you to keep the questions coming. We are answering them in due time. We'll bring some of them to the podium to answer as well. We also want to inform you that we'll be launching a couple of polls where you get to express your opinion. So please, we've already launched the first one in the chat area, so you can check in the chat box on the screen, when the polls come, so that you can participate in them. I would, at this point, hand over to Mr. Gilbert Lomofu from John K. and Associates, so that he will share with us the audited financials for the Access Pension Plan. Thank you.
Thank you very much. Good afternoon to you trustees and to you scheme members. So I'm here to present to you the independent audited report of the Access Pension Plan for the year ended 31st December 2022. And I begin with the opinion. We have audited the accompanying financial statement of Access Pension Plan, which comprise statement of net assets available for benefit at 31st December 2022, statement of changes in net assets available for benefit, statement of cash flow, and note to the financial statement, which include a summary of significant accounting policies and other explanatory notes. In our opinion, the financial statement gives a true and fair view of the financial position of the scheme at 31st December 2022, and its financial performance and cash flow for the year then ended, in accordance with International Financial Reporting Standard, in the manner required by the National Pensions Act 2008, as 766 as amended, and the Occupational and Personal Pension General Regulation 2011 LI 1990. The basis for opinion. We conducted our audit in accordance with international standards on auditing. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. We are independent of the fund in accordance with International Code of Ethics for Professional Accountants including international independent standards issued by the International Ethics Standards Board for Accountants, and we have fulfilled our other ethical responsibilities in accordance with the code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Now, trustees, Mr. Chairman, skip members, I'd like to skip the responsibilities of the trustee for the financial statement and those of the auditors for the audit of the financial statement, and move on to read to you the key audit matters. In accordance with international standards on auditing, key audit matters are intended to describe those matters communicated with those charged with governance that we have determined in our professional judgment were most significant in the audit of the financial statement. The key audit matter we have identified for purposes of this audit is income recognition. The scheme generates income largely from investment of assets of the scheme made up of members' contribution, as well as the undistributed portion of the asset of the scheme brought forward from the previous accounting period. Some of these investments straddle the end of the accounting year under review, and hence key consideration for the appropriate recognition of income of the scheme is the cut-off date. The income of the scheme for the year should be recognized only if they accrue and are derived during the year up to the and including the year ended, being 31st December 2022. Income that are accrued beyond this date should be recognized in the following accounting year. To ensure that in recognizing income, the cut-off date have been taken into consideration, the audit team performed the following procedures. Review the design and implementation of the scheme's income recognition procedure to determine the adequacy of controls over the scheme's investment valuation procedures and income recognition at the year end. We obtained evidence of the existence and accuracy of interest income thereon of a sample of significant investment whose maturity dates are after the year end by reviewing their particulars and recomputing the expected year-end interest income. And finally, we evaluated the adequacy of the accounting policies and disclosures of income recognized in the scheme statement of changes in net assets available for benefit. Report on other legal and regulatory requirements. We have obtained all the information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper books of account have been kept, and the trustees of the scheme have fully complied with the prohibited investment practices stated under Section 35 of the Occupational and Personal Pensions General Regulations 2011 LI 1990 and all other requirements under the National Pensions Act 2008, Act 766, or the National Pensions Amendment Act 2014, Act 8683, as far as it appears from the examination of those books. The engagement partner on the audit resulting in this independent auditor's report is Gilbert Ajetelo Mubio, whose practice number is ICAG/P/1417, and I signed for and on behalf of John K. & Co., whose practice number is ICAG/F/2023/128 on 28 April 2023. Thank you very much for your attention.
Thank you very much, Mr. Gilbert Lomote. The annual report, as he read, is available in the link, the registration link that was shared with you via email and then SMS as well. We also want to assure you that they will also be available on the web portal. So when you visit your web portal, you should see you should be able to see and download the report. But today, currently, as we speak, the very link you use to register for this at AGM, you will see the annual report there and be able to download them. We'll be taking a presentation from our partners, the First National Bank. But before that, we want to encourage you to keep bringing your questions. We've answered most of them. We'll answer most of them here as well. So please, if Mr. Edward Nyako from the First National Bank is ready, please join me and give us your presentation. We can do it for him as he comes. Thank you.
This is good. Good afternoon. Yeah, so happy to present to you a product FMB and Access Pension has been working on for the past 2 years. And we believe is a product that helps you as a contributor in being able to acquire your home or develop your home. So what is the pension-backed home loans about? So for pension-backed home loans, the only way you can participate is you have to be a contributor of Access Pension. That's very key because we are leveraging on your contribution to be able to give you a loan. Now, what it also does for you is that for most people who walk into offices looking for loan, we use their incomes, and it's only your income that is used as a basis to assess you. But what this does is, apart from your income, we get to know how much you've contributed, and that also helps us to be able to give you either more money or also reduce how much you need to pay on monthly basis. So we believe that with these, it gives you the option to be able to acquire homes, especially at this time. Now, what can you use this pension-backed home loans to do? You can use it to buy land if you want to. You can use it to either purchase a home, or you can use it to build if you've already started construction. And if you also want to renovate, these days there's a very common thing going on about going green, and very soon we are informed that the Energy Commission is going to encourage people to get into solar, where they can get the net metering. The net metering, what it does is that you generate energy through solar, and depending on how much you generate, your account will be credited. So whatever you generate, if you don't use all, it gets credited. And we believe that with this pension-backed mortgage, you should be able to get yourself onto that scheme as well. So for pension-backed mortgage, we looked at 3 options. So the first option is where we look at how much you've contributed. And then based on how much you've contributed, we can then decide to give you a certain amount of loan. Like I mentioned earlier, the usual thing would have just been to focus on your income, but now we are looking at your income and also with your contribution. So that gives you opportunity to earn enough more to be able to purchase a home. The second option is also an instance where you think that you don't want to use all the monies that you have, but you want to take part. I must say that our preference is not for you to take out the money. It's always to keep it so that you can get the best return. But it's an option that we had to introduce based on engagement with project partners and also clients. So you have that option, but there's always a cap on how much you can withdraw. But that also helps you to, like I said, it helps you to borrow more. It also helps you to reduce on how much you have to pay on a monthly basis. The last option is we also look at your contribution, and then we will offer you 100% loan on the property you have. Traditionally, we don't offer 100% loans for properties you want to buy. At least we expect you to make a contribution of 20% and we give you a loan of 80%. But we can look at how much you've contributed, and on the basis of that, give you a loan for 100% to be able to purchase the property you are looking for. So on the pension-backed products, there are a lot of things you can use the pension products, backed products to do. I mentioned about purchase. Usually purchase, what we see happen is we tend to have first-time buyers, and we believe that this scheme is something that we're encouraging a lot of young people, first-time home buyers, to take advantage of it to acquire homes. Also, if you already have a home and you're thinking of adding on, it's also an opportunity, because we always see that acquiring a property is also another form of investment that also help. There are people who also buy these units to let. So you can always use your pension contribution and your income, and you can buy to let. There are people also who have started projects, and we find that very common in Ghana, where people believe that they always want to build their own homes. We can assist you to be able to complete a house you've started. You don't need to take 5 years to build. You can move in now and enjoy the property now. If you also acquired land and you are not sure, with your contribution and income, we should be able to give you money to build. We always believe that it's important for you to complete the house and move in, rather than having to start your projects and the house is not completed and you're also paying rent. We always believe that, and we can always advise you in terms of your design. Do a house that you can afford now, and then as you move in, you can then expand and add on the additional rooms as you require. So you don't need to be looking for money to build and at the same time paying rent. Then land purchase is a product that you can also purchase. It gives you an opportunity to get onto the property ladder. At least once you have land, you know that you are going to build, and we always have schemes to help you. Just like I did mention, we are not only looking at your income. Your contributions will always be key when we come to helping you build or developing the land. Now, also what we also do is for people who already have properties and have these properties in their names, you have the option to be able to release equity in these properties. Usually we'll give you up to 70% of the value of the property. And if you either want to do any additional investments, you want to go to school or educate yourself or start another business, this is a good opportunity that you can leverage on. We also have clients who, for various reasons, would want to switch or refinance their loans for either a longer term or for much more competitive rates. We are happy to help you with that. We have Save to Own. Save to Own is actually targeted towards the self-employed. We realize that in Ghana, there are a lot of people who find themselves in that space. We also do recognize that because they don't keep good records, it's been very difficult for us to be able to assess them, to be able to offer them loans. So what we do is we, depending on the amount you are looking for, we go into an arrangement where you make monthly payments for a period of 12 months that we use to assess you. Once you've been able to demonstrate that you can make those payments for a period of 12 months, then we approve a loan for you to be able to own a home. So these are contact details. If you are looking to get more information on what we do and how to get onto the pension-backed mortgage scheme, you can reach us on these contacts that we have, and we'll be happy to assist you in becoming a property owner. Thank you very much.
Thank you very much, Edward. Please don't go. I will be calling you again shortly. So yeah, once again, if you are now joining us, this is the 2023 edition of the Annual Open Forum for the Access Pension Plan. At this point, we'd like to take a few questions here. We've answered most of them in the chat. So first of all, I will invite Edward to answer this question. So someone wants to know if his salary needs to pass through the bank before he qualify for the loan. And after that, Nana Rafi will also join me to answer a few questions. So Edward, please, if you can help.
Thank you. That's a very interesting one. Does your money... So first of all, you don't need to be an account holder to get a loan. But you see, we give the loan for 15, 20 years. And it's a good time, a good long time for us to establish a relationship. So opening an account also helps you as a customer of the bank. There are a lot more benefits you get when you have an account than somebody who just keeps a transactional account that only uses that account to pay for your loan. So if you don't have an account now, it doesn't mean that you can't access it. You can access a loan. But we always encourage people that since the marriage is for 15, 20 years, open an account with us. Anytime there's any sweetener for people who are account holders, you stand to benefit. Thank you.
Thank you very much for the answer, Edward. So at this point, Danayafe, if you can join me to answer a few questions from your presentation. After that, we're going to have another presentation from the General Manager of Access Pension Trust. So Pakofi, please get ready. Thank you. Yeah, let me read. Okay, so I'm going to go through the questions quickly. The first one is that somebody wants to know, okay, it says, in my view, the real question is, can the government be trusted with all that is going on? The next one says that the coupon rate of 21%, as you said, looks better than the 18%. However, my problem is that can they pay the current rate of 18%? Like, sorry, if they can't pay the current rate of 18%, what's the guarantee that they'll be able to pay the rate of 21%? And then, okay. And then someone is also asking, how safe are my funds after 4 years in pension? How safe are my funds after 4 years in pension? So I'm going to hand over to Nana to answer these questions for us.
Right. Thank you very much. I'll take the question one by one. So the first question, can government really be trusted? It's a difficult, question, to answer. It's a difficult question, to answer, right? I don't think I trust government that much. However, government has obligations, right? They have obligations, they need to fulfill, right? Despite, everything, happening, I don't know where you work, but then if you are a civil servant, I'm sure your money is coming through despite the difficulties we are facing. This DDEP was occasioned, because of overborrowing, and something, needs to be done, right? So again, after the DDEP, government really have raised record money through treasury bills. It means people, trust, government somewhat, and we haven't had any default on treasury bills. So if you're an investor, what you have going for you, really, is trust. Otherwise, you would park, monies, and keep the monies, in cash. And when you have your monies in cash too, inflation of 43 would deal with it. So it's a difficult, question, to answer. But then in relation, to investing for your future, for your pension, our belief is that all our investee companies, whether government or corporate, would fulfill the obligation. We do our analysis and invest, according to what we come by from our analysis, and we believe government would fulfill the obligation. On the comparison between the 21 and the 18, yes, there's a trade-off. We are getting a higher return, and the trade-off also is an extension of maturity, right? Government is constrained liquidity-wise, and from the old bond, it was going to be very, difficult in servicing the current obligations. So what government, has done is to extend the maturities, and in exchange for, that extension of maturities, right, they are paying a higher interest rate. If you look at the maturity schedule of the old bonds between 2023 and 2024, we had over 50 billion bond maturities, right? If government hadn't done this, it would have been difficult for them to service that 50 billion obligation, extending the maturities to 2027 and 2028 and offering higher interest rates gives them, room, to operate. So that is a trade-off, really. And then how safe are my funds after 4 years in pension? Your funds with Access are very, very, very safe. That I can say, very, confidently. We basically run a multi-asset schemes. So we don't have all our eggs in one basket, even though majority of our asset allocation are in government, obligation. We feel there's a lot of recency bias, right? Recency bias is when you remember, the pains of yesterday, and based on the pains of yesterday, it affects you from making objective, decisions today. This really hasn't been, the first time as a country we've gone through this, right? We've restructured our debt, before, and we got back on our feet. We feel we would ultimately, get back on our feet. And for those who are investors, you basically, stand, to gain. The alternative is expensive. Really, the alternative is not investing, it's spending everything you have today. You can do that. And if you do that, I know God will give you a long life, right? You will live to 90 and you will see how you would manage, your affairs, going forward. So your funds with Access are safe. Despite everything that is happening, we've met all our liquidity obligation. Nobody, can say that they wanted, their funds after investing with us for a minimum 5 years, and Access, denied, them, of their money. When you apply, for your money and you've met our vesting rules, you get your monies in time. Thank you.
Thank you very much, Naneri Afe, for that. So we'll be taking a few more questions, but that will be after Pakofi's presentation. So Pakofi will do a short presentation, and then afterwards we'll take a few more questions. There are a few of them. A couple of them keep coming in, and I think Edward will have to come back again, but that will be after Pakofi's presentation. So let's put our hands together as we receive the General Manager of Access Pension Trust to give us a presentation.
Thank you. I feel very important this afternoon. Good afternoon, ladies and gentlemen. Good afternoon, trustees, and good afternoon, our scheme members. I think I have a very simple task here. The earlier speakers have made my work very easy. I'm just here to give you good news. The earlier discussions centered about debt exchange, all the things that you've been panicking about. I believe a lot of it, of your fears have been allayed at this stage. But let me compound it with some good news from Access Pensions over the few years. I know FMB has already shared the first great news with you. So let me go on to share subsequent ones. Now, as a corporate trustee, our job is simple. You have given monies to be invested on your behalf. What we owe you is to make sure that you are able to track and know whatever happens on your account. If we are unable to do that, we have failed. We have, for that reason, put in place a number of measures to ensure that wherever you are, even if you're underwater, you should be able to access your statement. That is, if you want it. If you decide that you do not want it, there's not much we can do. But as much as you want, we have made it available to you on various fronts. We have various digital channels, which I'm coming to touch on. But beyond that, we have our offices. Our head office is in Accra, in East Legon. In East Legon, right across the street there, just behind Tender Sprout School. In Kumasi also, we are located in the Doom. We have an office in Kumasi. We also have an office in Takoradi, on the TAC Hotel terminal, and then an office also in Tamale to serve our clients in Tamale. It may be that where you live and where you work may not permit you to visit us in our offices. So in the comfort of your home, you should be able to access whatever happens on your personal pensions account. Now, the first of the platforms I want to introduce to you is the client web portal. The client web portal has been designed to give you that flexibility. All you need is a computer or a web browser to go on the client web portal. It is a secured platform for all our scheme members to access information on their pension account or their personal pension account. Just visit cap.accesspension.com/CRM. The link is right there on your screen. Or you may visit our website, www.accesspension.com/Ghana. Go to login and you choose member login. Once you choose member login, it will request for your member number with Access Pension. Your member number is your unique account number with Access Pension Trust under this Access Pension Plan. This you may have received through SMS alerts from Access, or during your enrollment, you may have been advised with that account number. You may use that number to access the platform, or you can use your SNIT number if you have a SNIT number. And if you do not have a SNIT number, but you've forgotten your SNIT number, or you're a member from the controller payroll, say you're a nurse, a teacher, or anybody on controller payroll that has enrolled onto the Access Pension Plan, you may use your controller number to access the platform. Now, once you enter that number, or you opt for that number, you enter it, it will request for your phone number or email address, whichever we have. Now, once you enter the email address that we have in our records, a one-time PIN will be sent to that email or phone number for you to enter, and voila, you should be in the system. Once you enter the system, there are a lot of things you can do. These include accessing member statements and scheme certificates. You join the scheme, you say, but I've not had any document to show that I'm a member of this. You do. It is on the portal. So once you register as a member of the scheme, once you have access to the portal, you should be able to download your scheme records. We want to go green, so we are not going to issue you papers. If you decide to get papers or download papers, that's you can keep it in your records, but it's on the web portal for you to access. Similarly, we have a scheme library and documents. So like we currently are having, we are having the open forum or the AGM for 2022 annual accounts for the Access Pension Plan. It's pretty simple. The documents associated to this forum, the annual report, the audited accounts, etc., are in the scheme library. This is on the annual basis. But beyond that, we also have quarterly reports to help you keep track of what is happening on the fund. This includes economic reports, investment reports, how the fund has performed in terms of returns, etc. And this is also available on the document portal. If you have any concerns and you want somebody to chat with, there is the live chat there that you can always type, and there will be somebody available to talk to you and provide you all the necessary assistance. Now, I'm also happy to announce to you that you do not need a paper withdrawal form to withdraw from your personal pensions account. Withdrawing from your personal pensions account is as easy as sending Momo to your grandmother in the village. All you need to do, go on the portal and access our paperless withdrawal request. You enter your bank account, which we would have already populated in the system, your ID number, which we would have already populated. You state the amount you want to withdraw, and voila, you submit it, and we should be able to pay you out. You don't need paper to do that. Of course, not everybody may have access to a web browser. Sometimes opening a web browser on your phone to access these services may be a bit cumbersome. So what we've done is that we've replicated just the same service on what we call the Access mobile app. I'm sure a lot of you are already on the mobile app. You use it quite often. we have recently upgraded the mobile app to give you some additional features. Now you can use your facial ID or some other biological ID to log onto the mobile app. A lot of things have been introduced, including now, if you are you don't even have a personal pension account, you are not a client of Access, but you are interested in signing up to the personal pension account, you can do that on the Access mobile app. You can also do the paperless withdrawal, as I mentioned. And if you are a member of the Access Pension Plan and you feel that you have a very good friend whom you believe needs this service, needs to join the personal pension scheme, you can refer that friend. We will call that person and then get the person converted to join the Access Pension Plan. You could also update your records, etc. And you could make additional voluntary contributions on the Access mobile app. Your monthly contributions may come in. You may have gotten some money from an auntie or an uncle as Christmas is drawing near. Somebody has sent you some money from outside and you feel, oh, let me put some down for myself. You can put that in the Access Pension Plan towards your retirement. If you so decide also that, hey, for me, I'm not too comfortable with this technology thing. So I prefer to use a simple phone, a YAM phone. You can still access your records with the Access Pension Plan. You just dial *1860#. This is on MTN and Vodafone, and you should have access to all the other services I mentioned. This will come in an analog form, but it is still the same service, and we can call you. If you're a member, you've never tried it before, just dial *1860# and register for the service. Once you register, it is free. Once you register, you can have access. And if you're a member but you can't seem to register, dial *1860#, send something to Enquiry, send a message to Enquiry, and somebody from our office will call you to assist you. Let me also say this. As I said during my introduction, I mentioned I have very good news for you. So I'm here to let you know that the Access Free Life Insurance cover is still available for you, our scheme members. You do not pay anything to enjoy this benefit. As a member, by virtue of the fact that you are a member of the Access Pension Plan, if you should die, God forbid, or you should be past medically incapacitated by a certified medical doctor, you will be able to access the free life cover beyond what you'll be accessing under your Access Pension Plan balance. This policy is underwritten by Hollard Life Insurance Hollard Life Insurance Company Limited, and it's for all members of Access Pension Plan. The only thing you need to do is to be an active member of the Access Pension Plan by the time, God forbid, you pass or you are past medically incapacitated. You shouldn't have left the account dormant, have 1 CD or 5 CDs in the account and come and say that, oh, I have 5 CDs in the account, but I've been medically incapacitated for the past 2 weeks, so pay me the 5,000. It doesn't work that way. You just have to be active. Now, let me just run us through some features. I know we signed up to the Access Pension Plan. A few of us signed up yesterday. So others also signed up some 10 years ago. Access Pension Plan, I'm happy to say, is in the 10th anniversary. It was started in 2013. It is the longest running and largest personal pension scheme in Ghana. Currently, it's the total assets, I think was mentioned, is close to 300 million Ghana cedis. Transactions on the Access Pension Plan can be initiated and monitored on all our digital platforms. You do not need to come to our office to initiate a transaction on the Access Pension Plan. You do not need to call anybody. All you need to do is just go on any of our digital platforms. I mentioned the USSD *1860#. I mentioned the online portal, and I mentioned the mobile app. You can do that on there. Now, members in the scheme have basically 2 broad sub-accounts. So once you become a member of the scheme, you have what we call the retirement sub-account and the savings sub-account. There are rules guarding each of these 2 sub-accounts. Now let's talk about the rules. The minimum holding period for the savings sub-account is 5 years. So as a member of the Access Pension Plan, if you decide to contribute whatever money you contribute that goes into your savings account, you need to hold it in there for a minimum of 5 years. If you decide to withdraw before 5 years, you will be penalized. We discourage, especially in these liquidity tight times, for anybody to withdraw from their savings accounts before the 5th anniversary of the account. If you decide to also contribute into your retirement sub account, the minimum holding period is 10 years. If you have contributed anything into that account and you request to withdraw, you may not be able to withdraw. We would process for you in most cases, but we, as much as possible, discourage you from withdrawing before the minimum holding periods of these 2 sub accounts. Every member of the Access Pension Plan has these 2 sub accounts. You can log into the mobile app, you can go on the online portal, and you can check where your contributions go. At sign up, I'm sure you indicated where your contributions should go. Now, I think I mentioned early withdrawals, that's before the end of the minimum holding period, attract penalties. The Access Pension Plan is a personal pension scheme. It is not a bank account where anytime you need money, you draw from. There's an objective for you starting this personal pension. You should have it at the back of your mind that it is a long-term savings scheme. It is not a short-term savings scheme. So as much as possible, if you don't have a 5-year or 10-year horizon, please do not subscribe to the Access Pension Plan. We discourage you. There are other forms of investment that may be ideal for you. It may not be the Access Pension Plan. The idea is to instill discipline in members to ensure that you have a very smooth journey towards your retirement. You don't need an investment that allows you to withdraw every time, which will be distorted or distort your financial journey. Of course, we encourage additional voluntary contributions. So you can make additional voluntary contributions. Anytime you get some additional money somewhere, you can contribute it into the personal pension scheme. But the basic or minimum contribution period, mod, is a direct debit. So once you sign up, we give you a direct debit to complete. You complete a direct debit, and then on a monthly basis, monies are deducted from your bank account. For some selected employers, however, they have the chance to contribute to their payroll. So there are payroll deductions for some selected employers. This include controller and accountant general department employers. So that is it. I'm happy to say on that note, on the controller and accountant general department payroll, is that in the past, contributions from controller and accountant general has been on after-tax basis. So members were contributing and they were not enjoying the tax benefits associated with a tier 3 fund like the Access Pension Plan. We have successfully been granted permission to deduct from members of controller and accountant general's payroll free tax deductions. So effective September, all members whose deductions come from controller and accountant general payroll are going to enjoy the tax benefits associated with a tier 3 fund like the Access Pension Plan. This may mean that your take-home salary as a controller member or member from the controller payroll will go up. But it means that you have a minimum of 10 years, whether savings or retirement, a minimum of 10 years you need to be in the fund. If you decide to withdraw before the 10th year, there will be tax penalties applicable to your withdrawal. Thank you very much, and I'm sure there will be questions that we'll be happy to answer.
Thank you very much, Pakofi. Please stay close. I'll be calling you back shortly to answer a few questions. So as I mentioned earlier, Nana Yafe will be joining me, and then Pakofi will follow to answer a few questions. We had a question for Edward from FNB, and okay, he's provided a response. So please, Nana Yafe, if you can join me. So quickly, let me just read. Someone is asking that he's 46 years old, and he wants to know what he needs to do to have better pensions. Looking at the economic meltdown, he says he's lost confidence in the system. Someone is also saying that he's already retired and he is he is asking us why he needs to continue investing. So he's a retiree, and he's asking, okay, the person has an annuity and want to know why he should continue investing. So if you can take this.
All right, thank you. Thank you very much. For the 46-year-old who wants a better pension, but has lost confidence in the system, we would encourage you. I mean, I'll speak about what I know, and I could tell you, I mean, our schemes are run, I mean, prudently, professionally. Like I mentioned, I mean, we are very, very diversified, right? So if you look across the market, most mutual funds and most pension schemes have close to 90% of their assets in government-related assets. If it is not government bond or treasury bill, it is an ESLA PLC bond or a Dachi bond. Our scheme has just about 66% exposures to that asset, and the remainder in asset classes not directly related to government. Having, I mean, said, I mean, that in investment, I mean, if you had listened to, I mean, the chairman's remark, there are periods where you go through, I mean, angst, you go through pain, you go through difficulties because your balances, I mean, will fluctuate. There are also periods where your balances, I mean, would grow, right? It is who invests for the long term, who reaps the benefit. Like you saw during our presentation, despite the difficult period, I mean, last year, your personal pension scheme delivered, I mean, the best return to date. It delivered the best return, I mean, to date. So yes, given everything that has happened in the market, I won't fault you. I mean, if you feel, I mean, you've lost confidence, but then again, there's no alternative, right? There's no better alternative, right? You could do real estate, you could buy lands, right? If you go into retirement and you don't have any, I mean, cash flow, right? Your SNET payment is not enough, and you have, I mean, lands all over the world. I mean, let's see how, I mean, you can monetize, I mean, that land, I mean, to spend on a daily basis. If you need to, I mean, attend to an urgent emergency, medical, or your very, I mean, great, I mean, nephew has gotten some scholarships, some school somewhere, and you need to support. How would you, you know, turn, I mean, around to help? So there's really, I mean, no, I mean, better alternative. I can say our schemes are well run, professionally run. We are ethical, and if, I mean, you trust, I mean, us with your money, we would definitely, I mean, grow, I mean, your money, I mean, for you within the constraint of the macro economy, within all the constraint we have, and ensure, I mean, you enjoy some good, I mean, retirement. Somebody asked a question before that he has been seeing some fall in his access pension, I mean, plan. And yeah, so like I mentioned, I mean, usually, I mean, people, I mean, hardly judge the performance of their scheme from beginning of the year. Last year, between January and October, our schemes, I mean, did about 54% returns. And the main reason was because we put a lot of our assets in euro bonds. And when the currency, I mean, saw a sharp depreciation in September, in October, in November, I mean, you benefited, right? December came with the IMF announcement, with some euphoria around the turnaround in the economy. We saw the cedi strengthening, right? And once the cedi strengthening, it means the dollar value of the asset held in the funds will fall. So members, I mean, saw decline in their balance in December. But then if you are, I mean, to look in on your statement and judge what your balance was in January, right? Accrue your monthly contribution and then compare it to where you were end of December, you'd realize your fund grew by 30% plus, right? 30% plus. Your balance obviously would have reduced, I mean, from the November balance, but on the whole, you are up. So that is how, I mean, it works, right? I mean, one thing we don't have control over as investors is market risk. As chairman mentioned, if the market churns out, good return, you would enjoy. If the market does not turn out good return, we cannot, manufacture and conjure return, for you. We would report transparently. And sometimes that implies you would see some fall in your balance. Yeah, so for those who are, retired and you want to, invest, really the book, a good book says a good man leaves inheritance, right? For his children. So if you are retired and you're in a position to generate, positive, cash outflow, why not? Invest. Why not invest? The Access Retirement Drawdown is meant, for retirees who have accumulated enough balances in their pension and still want it managed, right? So they can draw regular income, monthly. So if you are a retiree or you are close to retirement, you've accumulated enough balance and you don't want to get, those balance paid to you because you are probably afraid of abusing it, you can keep it in our program, drawdown, and we'll work with you and then see, how best we can pay, regular income to you from the returns your investment will generate. So I think that will be it. If you're in a position, to invest, whether you're a retiree or you're not a retiree, you have, cash flow. By all means, return. Look out for, a credible, fund, a credible pension trustee. And I dare say, Access is number one, on the top, and still invest with us. Thank you.
Thank you very much, Nanayafe. We would like to encourage you to keep bringing the questions. We will answer all of them before the call close. So we had a few questions for Edward, but he's provided the answers to us here. So I'm going to read them shortly. So somebody asked, what is the interest rate on the home loan? And he's saying that it's a city loan. And so the interest rate is the Ghana reference rate, GRR plus a margin based on your risk profile. So they would need to have some form of an assessment before the rate can be arrived at. Someone is asking, what are the terms and conditions of the loan and what's the minimum and the maximum amount? The minimum loan amount is 200,000. There is no maximum. So if you want to build a mansion, you can still see them. Repayment rate, somebody wanted to know the period. The repayment period is up to 20 years. And then what are the eligibility criteria? It's for somebody with the regular income and then a property with good title. And the documentations you need, that was also asked, is a completed ID application form, an ID, a proof of a letter, and then a bank statement, and then a copy of the title of the property. I would ask Pakofit to join me to answer two quick questions as we get close to drawing the curtain down. The first one is, I have been obedient in my monthly contributions, but I halted due to the debt exchange. I'm scared. What do I do now? And somebody also wants to halted. Yes. And then somebody also wants to know if withdrawals can still be made after the DDEP.
So withdrawals after the DDEP, we've never stopped anybody from withdrawing. As the rules shown earlier, you notice that if you've not met the minimum holding period, as I said, we discourage you from withdrawing. As much as possible, you should have had an objective for doing the personal pension scheme. It is not for everybody. It is for people who wish to do something better for themselves in the long term. So the DDEP does not stop you from withdrawing or us from paying you out if you have reached the minimum holding period or you've exhausted the minimum holding period. So that's it. The second question again?
It was very complicated before
the halting, yes. Please, I think you are behind schedule. You have a reason for investing. There is nothing to distort that journey. I'm sure when you started that journey of contributing to the personal pension, you had an objective. If you have halted, I don't think you are doing yourself any favors at all. continue investing. It is our responsibility as trustees to ensure that whatever happens on the market, as much as we can with our professional knowledge, we mitigate that impact on your account. And that is what we'll continue doing. And that's what we'll continue sharing with you through such platforms. I must say, before I sit down, I must say that I'm happy to also announce that I know a number of you have had problems with your deductions coming through in the past. We have largely fixed a number of them. There are a few banks that we are still trying to work around. So that should be resolved. Currently, we have about 14 banks that we are working with, and we do not have much of a problem. The other banks we continue to engage. Sometimes it's the cost, and we think about you, the scheme member. We also are in the process of having the Access Pension Plan available on mobile app for some banks. We currently have the Access Pension Plan available on the CowBank mobile app. We are in the process of integrating with EcoBank and Zenith Bank, and that should also be up shortly. There are a few banks that we are looking at. So if you bank with any of these banks and you go on their platforms, I'm sure you'll be seeing the Access Pension Plan for you to top up or do any transaction on very soon. So these are things that we are doing to ensure that, hey, at the end of the day, your monies come in, we are able to provide you the services that we promise you. But all is not done yet. As I said, there are a few banks that we still have a few challenges with, and we continue to work to resolve. Thank you very much.
Thank you very much, Pakufi and Kuma. And to you joining us, thank you very much for spending almost 2 hours with us. We appreciate this. We want to encourage you to continue using our service channels. We've talked about the mobile app, we've talked about the web portal, the USSD, as well as the toll-free number. We are always available to answer your questions as they may be. We'll be here next year around the same time for the next edition, or the 2024 edition of the Access Pension Plan Annual Open Forum. It's been a great joy having you this afternoon. As we bring the curtain to a close, we'd like to take a closing prayer, and we invite Albert, our brother Albert, to share with us a very short prayer, and then we can call it done. So we can give it up for Albert as he joins us.
Let's pray. Father, we thank you for today. We thank you for this afternoon and the gathering we've had both physically and virtually. Lord, we thank you for the deliberations we've engaged in with our stakeholders, our members, our trustees, and scheme partners. Father, we pray that let everything that we have discussed today, let the initiatives that we have presented, let the thoughts and ideas that have come forth and have been shared with stakeholders come to fruition. Let them yield the right results. Let them help us as stewards protect the value of our scheme members. And Father, as we meet next year to deliberate on matters concerning the Access Pension Plan, we will declare the success and victory to the glory of your name. We thank you. In Jesus' name we pray. Amen.
Thank you, Albert, for that powerful prayer. So all too soon, we've come to the end. Thank you so much for joining us. To our members of the Board of Trustees, we say a big thank you. Until we see you again, this has been Access Pension Plan, your reliable partner in pensions. Thank you and have a good day. Bye.